Inviting Tanvee Gupta Jain, the economist at UBS, to understand what are their projections. Remember, UBS has lowered India's FY26 growth forecast by 50 basis points to 6.3%. They believe softer domestic growth and a Trump tariff on China will impact India. Tanvee, good morning. Thank you so much for joining in. Well, just wanted you to elaborate on the rationale that you have for lowering the GDP forecast, because some believe that maybe if there are tariffs on China, that would be positive for India. What's your take, and why are you factoring in lower growth?
Sure. Thank you for having me on the show. So yes, you're right. We are expecting a lower GDP growth for India in FY26. In fact, we have actually lowered our forecast by 50 basis points to 6.3% right now. And this is largely taking account two factors. One is Trump 2 and what it means for India. And the second is the softening in growth momentum, which we are already seeing on the ground. While we expect a cyclical recovery in second half of FY25, we think that there are more concerns on the growth softening, partly because of the global uncertainties which are increasing. So let me elaborate a bit why we are downgrading India's growth forecast. So we think that Trump too can impact India through three channels. One is what happens to the global growth because of a slower US and the China's growth. So our UBS economics team has lowered global GDP growth forecast by 30 basis points for both 2025 and 2026. We think India is a low beta economy because unlike the Asians, more open economies, but I think India is not immune. So there is going to be an impact on India's growth as well because of a slowing global growth. Second is where I'm more worried about is a further delay in India's private corporate capex recovery due to risk of China's offloading excess capacity in the manufacturing sector. And we have seen so far that bulk of the heavy lifting on the India's investment cycle was either done by the government or the residential property market doing very well. The corporate sector yet, at least from the data of 4,500 companies that we track, has shown a recovery, but it is concentrated in a very narrow part of corporate India. And in case we do end up seeing Trump to related tariff hike on US and US imposing on China, I think that excess capacity will further delay the corporate capex recovery in India. And third, which is very interesting, and I think it should matter more from an FX policy point of view, is that any risk of a greater depreciation pressure on China's RMB could have implications on India's net good trade balance. And we saw it what happened in 2018-19. China's RMB depreciated by almost 13%. This time, my China economist is talking about a 5% weakness in RMB. We are expecting a 2.5-3% weakness in INR next year. So INR actually appreciates against RMB, which again makes it easier for the corporate to import from China rather than expanding domestic investment capacity. So I would say largely the growth slowdown risk is more because of US-China trade war and plus the softening we are already seeing. But as you rightly pointed out, I think India will see a strengthening of China plus one supply chain shifts. And we are already seeing a lot of supportive policy measures to boost manufacturing. So if I look at a year beyond 2025, we are actually saying India's GDP growth could actually recover to 6.6% in FY27 because of India gaining from in the medium term perspective.
So, Tanvee, your base case assumes that Trump imposes a 60% tariff on China. That's the base case. And what about the other veiled threat about a 10% import tariff on the rest of the world? Is that baked in? And if it does come through, what will be the impact on India?
Sure. So the base case right now is that Trump imposed 60% tariff on 75% of China's goods starting from the September quarter of next year. And we are expecting that increase happens in tranches, lower the larger. So basically, initial tranches will be lesser taxes. And as you move up in the fourth tranche, the tax impact will be much higher. For most of our Asian economies, we're expecting a much sharper impact on their GDP forecast for 2026 versus 2025. And because India follows financial year, obviously, since we are expecting impact to start feeling into the numbers from the September quarter, India could see bulk of the impact in FY26 onwards. So we are not yet expecting tariff hike beyond that 60% or on other countries. But in case you end up seeing, because right now all the media reports are talking about what if Trump is imposing extra tariffs on, countries beyond China, and in case there is a 10% tariff hike on rest of the world, I would see there is a downside of 30 basis point to my 2026 or FY27 GDP growth forecast, which I'm currently at 6.6.
Okay, all right, then we get that point. I would have liked to chat a little bit more, but completely out of time. But thank you so much for joining in and telling us what's your rationale for downgrading those GDP growth forecasts for the next fiscal. Time for a short break now. We'll get you more on the markets on the other side.